Check. All right, good afternoon, everyone. My name is Robbie Richardson. I'm the Associate Director of PSU's Institute for Sustainable Solutions. We'd like to welcome you to this is the third weekly seminar series that we're hosting this term for spring. Just a couple of housekeeping notes before we get started. Please remember to turn off your cell phones. And there will be time after the seminar for discussion with the audience and questions and answers. But we would like to ask you to use this floor mic down in front because we are live this evening, and we also are recording this to be archived on the internet for web viewing later on. And for the audience to be able to hear your questions, we'll have to use the microphone rather than just speaking from your chair. So if you could help us out with those two things, that would be great. It's a pleasure this evening to welcome Gardner, who's going to talk with us about building a local resilient financial system. Jared is the co-director of Oregonians for State Bank. He's also the owner of a firm called Equity Design. And a bit of background from him. He has background in finance and economics, and he holds degrees from the University of Oregon and from Reed College. And I'll let him tell you a little bit more about himself, but let's please welcome Jared Gardner.
Thanks, Robbie, and thanks for coming out tonight. I'm going to eventually get to the state bank concept. That's the topic that most people want to hear about these days. It's pretty politically charged, lots of energy. People are really supportive of that. But I feel like we need to step back and look at what's happened over the last few years, especially the last 15 years of deregulation. So I hope that you enjoy this ride, and I hope that it's interesting for you. When we talk about communities, I don't think there's anything more fundamental than our food systems when it comes to resilience. And food, farmers, obvious correlation, and farmers need financing. And any viable farm or any viable business that has its financing pulled from it, the rug pulled out from under its feet, is going to suffer. And what we've seen in this economic crisis is an arbitrary pulling away of the financial lifeblood of the very institutions, family farmers, and businesses that create a resilient community. And so ultimately what we'd like to do, Oregonians for State Bank, and the work that I've been doing is to build systems of resilience so that we can have productive economies. Here's an example of affordable housing. When you think of the workforce, there's nothing more central to a viable workforce than housing. And for the vast majority of workers, something that they can afford. And here's an example of a project that was in desperate need of repair. And without that repair, the federal subsidies that allow affordable housing to continue would not come. These are the projects that are not getting funded right now by the big banks, the Wall Street banks, as we like to call them, the U.S. banks, Chase, Bank of America, Wells Fargo. If it's outside of this urban core or outside of the Willamette Valley proper, these projects are not getting done. Some would like to say that that's an issue of credit worthiness, but there are projects, as this one is actually being done. It was inked. The deal was inked right before the crisis hit. These projects are extremely low risk and very good from a lending standpoint, and yet the big banks are saying, let's not do those. Let's not do the one in the Dalles. Let's not do the one in Roseburg. Let's not do the one in name your small Oregon rural town. So when we think about a financial system that serves Oregonians, we need to think family farmers, affordable housing, small business, the things that employ us and keep us stable in our economies. I think we're all fairly familiar. I don't need to go into too much detail on what's happened over the last few years, but here's the basic narrative. We have Wall Street crash, socialism, massive bailout that saves capitalism from itself. Here's a picture from Oregon. Unemployment lines through the roof. What's the unemployment rate now? It's pretty bad. And then jet skiing off into the sunset. Bank bonuses. Bonuses that total more than the combined state deficits of the 49 states that are in the red. So just to keep that in mind. So what's happened? I've alluded to this deregulation. We saw some changes in the early 90s, 94, 93, kind of in that era. When we just look at 15 years ago, the Wall Street banks, these banks, controlled 35% of our banking system in Oregon 15 years ago. Today it's 60%. It's a massive shift, and the idea that they proposed to justify deregulation was bigger is better. Economy of scale will save the American taxpayer all this money. Banking will allow the economy to flourish. We Equity Design, my firm, as well as a group that I work with, Real Wealth of Portland, decided that it was time to do something about this. Let's do a public education campaign about the difference between community banks and credit unions on one side and the large Wall Street banks on the other. We launched a Move Your Money campaign just this month, about 2 years ago. Here's our brochure looking at the different banks in our community. These are just the Portland banks. And rather than just saying, move your money without trying to evaluate what banks are and what they do, we came up with a criteria system that emphasizes the things that matter most to our community. So on the first column, we've got locally based. Take the Bank of Lake Oswego, for example. They exist in Lake Oswego. They're not going to pull up and leave that community. They're pretty set on making sure that the health of that community is solid. You've got our criteria here that 75% of branches are in the Portland metro area, or to get a 1 score in the Northwest. Pretty quickly you can see that Bank of America doesn't necessarily care about the health of Lake Oswego. Maybe they do this month if it's booming, or next month if it's the Dalles, they might not care. The second category is ownership, where ownership is profit flows. Credit unions are the best example. It's a cooperative ownership model. So any bank profits get circulated back to the shareholders, us who have accounts there. That would be lower debt, lower auto payments, lower home payments, that sort of thing, and higher yields on our savings. So that's one mechanism. Private ownership also circulates a lot of wealth in our communities. You think of the CEOs and the top executives who live here are making more money, whereas the larger banks, the top executives tend to be outside of the area. The main decision makers are thousands of miles away in most cases. Local business focus is the third criteria that we thought was important. Which institutions are focused on local businesses rather than the consumptive lending? And the caveat here is that credit unions have been forced into the consumptive lending. The banks rallied together and introduced legislation to X them out of small business lending to a good degree. So not meant to be too punitive, but the reality is small community banks are the ones that are lending most to our small businesses. So those are the concepts, but how do the numbers play out in our communities? And here we have some research done by the New Rules Project, Institute for Local Self-Reliance. And the data is pretty clear that the small community institutions that have the vast minority of our deposits do the lion's share, or in this case, 54% of small business lending. So which institutions are focused on small business and which ones are going for it, which ones are investing in those, the businesses that actually create the most jobs in our economy? It's the small and mid-sized banks. That's the community banks and credit unions. The large banks have a lot of our money, and yet they don't lend to small business. So the question is, what do they do? Actually, I'm getting ahead of myself. What's the difference? And when we drill down and we start to look at the difference between community banks and big banks, it's an economy of scale, at least the big banks would like to do. They can be more profitable by having their decision makers in Minneapolis or New York or wherever, and then loans get fed up the channel so that somebody at a desk 1,000, 2,000, 3,000 miles away makes a decision. That's not necessarily good for communities like the Dalles, where the local banker knows this is a need, this project is viable, these people have money, they're rooted in this community, this is a project that's going to do well. Minneapolis, U.S. Bank might say, well, we don't know anything about the Dalles, and there are no other like projects, so we're going to pass on it. That's the key difference is relational banking, when you can sit down with a decision maker and walk through much more than a credit score and a balance sheet. Like, what's your involvement in the community? What kind of support do you have? Does the community rally around your business? That sort of thing. To illustrate those points, Ben Bernanke, chairman of the Federal Reserve, spoke to the independent community bankers last month, a couple weeks ago. to illustrate this, saying that the largest banks typically rely heavily on statistical models to assess borrowers' capital, collateral, capacity to repay. Those approaches can add some value, but banks whose headquarters and key decision makers are hundreds or thousands of miles away inevitably lack the in-depth local knowledge that community banks use to assess the character and conditions when making credit decisions. This is a huge advantage for community banks, and it's fundamental to their effectiveness and cannot be matched by models or algorithms, no matter how sophisticated. The irony of the big bank argument of how they won deregulation so that they could do a lot more things that ultimately we saw in the last few years destroyed our financial system. The irony is that community banks are much more efficient. When you look at the data, they're much more efficient. Big banks are making a shotgun approach in a lot of cases, doing every loan that kind of fits this random model without even looking at some of the deeper underlying issues. So when you have a purely credit score-driven model, you can tend to get some junk on the outside. So that's one point. The other point is that the playing field, because of that deregulation, is extremely tilted. Big banks have all the momentum in their favor, and community banks are struggling with lots of regulatory hurdles. The chair of the TARP, the Bailout Commission, Congressional Oversight Panel, last year said that Wall Street banks have cut back on small business lending by more than double the cutback in overall lending. The big banks pulled back on everyone, but they pulled back harder on small businesses. Small business options just keep disappearing. So we have on one hand, big banks having the lion's share of our deposits. They have a non-relational approach, which means the furthest or the quickest sign of anything going sideways, they pull out of a market, and then they especially target small business and move out. So the question then is, what do they do? And again, I got ahead of myself. Last point on that, not to beat it too much, but Bank of America, they pride themselves on being the small business champion. They say last 10 years we've been the number one small business lender. They do a lot of little loans, and they only look at one volume of that. So you've got a massive bank that does a whole bunch of little loans, and then they raise their arms and say, yay, we did a whole bunch of loans. Well, last year they only did 6 in Oregon, 6 SBA loans. And those are government-guaranteed loans. This is the least risk loans that they could do, 6. Meanwhile, we have all the small community banks doubling and sometimes tripling the amount of SBA loans that they're doing, because there are good, viable, credit-worthy businesses in Oregon that need loans. In 2009, we saw a shift in overall bank policy towards, well, let's not give them loans, let's give them credit cards. Let's start offering credit to these small businesses that had a good credit record. Let's give them a credit card that starts out at maybe 12%, double the SBA rate. And then if they do anything wrong, we'll hedge our bets because we'll jack the interest rate up to 24, 36, whatever it is. 97% of the small business lending that Bank of America did in 2009 was through credit cards that have that clause to be able to ratchet it up. You wonder why, and you think about it, the negative spiral that happens when businesses rely on credit cards, their rates go up, they can't make their payments, then their business falters, they can't say pay their mortgage, or they can't pay their employees, and you get this cycle that starts to go out of control. So what do Wall Street banks do? If they're not lending to small business, they've got our money, and we're seeing that they're making record profits and paying massive bonuses, they must be doing something. Arms dealing, Chase, they're good. Let's lend to the corporations that are working with mineral extraction in Africa. They've funded the very corporations that supplied arms to fuel the genocide in Darfur, for example. That's one example. The next would be mountaintop removal. Talk about sustainability. We have in the Appalachians, again, Chase and other large banks fueling the multinational mining corporations to go in and just level the mountains for a little bit of coal, as we have this energy addiction to the fossil fuels, and we're losing our heritage sites and our natural resources along the way. Certainly your community bank doesn't lend to those. The last would be money laundering. Wachovia got their hands slapped. Wachovia Bank was absorbed by Wells Fargo. Got their hands slapped pretty good a couple years ago for money laundering for Mexican drug cartels, and it's back in the news. They haven't changed their practice. So when we think about sustainability and where banks are making their money, they're going where the profits are, and in most cases, that's not what's healthy for our communities, whether it's environmental destruction, fueling genocide or war, or money laundering through the drug trade. Think about the 60% of Oregon deposits that are in those banks. Here we have the average fees of banks. You'd think, well, if they're making that much money, they must not be charging our borrowers or our consumers that much. In reality, the highest fees are of the giant banks. And giants, those are the massive, the Wall Street banks. The large banks are massive. We have none locally in Oregon, or headquartered in Oregon. The medium banks and small banks are the ones that are treating their customers a little better. And this stat is a little bit misleading because the best chance of getting a fee waived is through a community bank or credit union if you do end up overdrafting your account. So we have big banks making a ton of money by extracting wealth out of our communities, putting them into things that make our communities less sustainable. And then when people are hitting the bottom, when their paychecks aren't stretching through the month, they're tacking on the highest fees. And I put a quote down there from the Financial Times front page, August 9th, 2009. The big banks stand to make $38.5 billion in fees. And it's almost entirely to the poorest of our communities, which then starts the cycle all over in the other areas. So that's the doom and gloom. Thanks for bearing with us. They have our money. They've got 60% of Oregon's money. What can we do about it? Again, that was the root of the Move Your Money project here in Portland. There's one in Southern Oregon. We've got them popping up all over the country with citizen groups coming together and saying, we need to educate people on which institutions are better for our community and helping make that shift. Moving our deposits is one side of the equation. That's the demand side. That's the liquidity that then banks can lend out. So if we moved all of our funds, all of our individual funds, all of our business accounts, all of our city funds, our county funds, our municipal funds, our school boards, our university funds, where's PSU bank? That would be a question. Into the institutions that promote a viable, healthy economy, that would supply that would be the supply side. We also have to think about the demand side. Where's the demand for loans coming from? Are we borrowing from them? If we're depositing with a credit union and then getting our mortgage through Wells Fargo and our auto loan through United Finance or whatever, we're giving the liquidity to our community banks and then sending our paycheck right out of the state every month. Surely there must be some reason we need the big Wall Street banks, right? Hopefully. Some would say that the large deals are what they do best. And again, we need to look at what is a large deal, and are those deals necessarily good for our community, or are we less concerned about mountaintop removal and maybe more concerned about distributed energy through whatever solar panels in our communities. The other thing that big banks are good at are the collateralized debt instruments, mortgage-backed securities, those sorts of things that in theory were good to share risk, but in practice the big banks were able to do loans, make a fee, and then dump these products off into these pools that then became pretty complex and obviously crashed. So we have, yes, we do have systemic constraints in terms of small community banks and credit unions cannot lend for the larger deals. But the flip side is we have systemic failures from a financial industry driven by big Wall Street banks. So just looking at one of the solutions then to larger loans, let's say you have a business down here that needs to relocate and wants to do some improvements or purchase a piece of property. It might be too big for the local community bank, but a few of them could get together. The peer-to-peer, they can participate together to get that loan done. Another option that the market has provided are private bankers banks. That community bank could go to San Francisco, to a non-retail bank, and say, hey, we'll do $1 million, will you do $1 million? And yes or no on that. Or to Austin, those are the two main ones that community banks here use. Or to big banks. And it used to be a gentleman's handshake. A community bank would go to Bank of America and say, hey, we've got this deal, we'll do this, you'll do that. Okay, great, we'll look at the deal, make sure it's good. But what we've seen, what I've been hearing from community bank CEOs is that the big banks have gotten up alongside the borrower, and once they start making their payments, they go, hey, you should bank with us. Why don't you move your account? Why don't you refinance your home? Why don't you then refinance this loan? And so community banks have lost a good share of their loans by participating with big banks. It's a great marketing strategy for big banks. Let's let the community bank take the initial risk, and as soon as it proves viable, let's take the client. So community banks are pretty reluctant these days to partner with big banks. Bankers banks, the private ones in San Francisco and Austin, have pulled back. They don't understand our markets. The Dows, I keep coming back to the Dows. for an affordable housing project that has millions of dollars of federal subsidy that could come in if only we could get a lender to do the loan. The bankers' banks, they don't understand that market. It's too small. There aren't a lot of comps. What other affordable housing units are there? There's just this one main, or I think there are a couple, but this one that has 94 units would be the equivalent of 4,000 units in Portland. So they're saying, there aren't enough to know how the market's reacting. It's not enough that it has a 2-year wait list. It's got one of the lowest default rates in terms of tenants not paying their bills, and it's got a pretty high subsidy rate from the federal government. So it's about as sweet of a deal as you could get from a banker standpoint, but nobody wants to sit down and listen to it. The community bank there, though, wants to, and they're asking the big banks no, they're asking the bankers' banks no, and their peers can't do it because it's too big. Because usually peers like to go 50-50. They don't want to go like, oh, you did 10%, we'll take the rest. They kind of feel a little imbalanced. So even the market has failed us in terms of providing solutions for these larger loans. Another question that comes up, if we're looking at moving our money, let's say we move all of our money, well then wouldn't community banks and credit unions be awash in cash and wouldn't they be incentivized to maybe lend in some areas that were a little more risky? That's certainly the fear, but the flip side of that would be, let's get more money into the hands of businesses. But there are some businesses that are not creditworthy. And many people who are looking at the work that we're doing are that's all they're focused on is the creditworthiness of these. So again, the liquidity, we've got to match that up with the demand. And also, so I guess the answer to this is yes, but no. More money for community banks, they're going to lend a little bit more. We're going to keep more money circulating in our economy, but there are structural limitations in terms of what they can do. Which brings me to a more enjoyable topic, one that we're having a lot of fun working with our legislators and treasurer on, is emulating some form of the Bank of North Dakota. The Bank of North Dakota is the only state bank in the U.S. It was formed in 1919, and in the context there, going back to the farm at the beginning, farmers were going to their bank and saying, hey, it's planting time again, so I've got this line of credit. I'd like to get my advance. I'd like to have this money to go hire the workers and buy the product to be able to put the seed in the ground. And the bank said, ooh, it's looking like rocky times. We're not going to give you the lending. Well, what do you mean? We're totally viable. We've got a built-in market. Our community buys our food. This is like it's always been. Nope, sorry, we're not going to lend to you. Then the farmer can't hire the workers. They can't put the seed in the ground. Then they can't take the product to market, so they can't make their payment. The same bankers are going, oh, whoop, now we'll take your land. Now we'll wait it out and we'll sell it in better times. So a very viable business had the rug pulled out from underneath its feet and then the property taken, just from the bank decisions of out-of-state banks. So people in North Dakota said, enough's enough, rose up and said, we want to create our own institution to make sure that we are never at the mercy of outside banks again. The policy of the Bank of North Dakota is pretty simple. It's just to promote the agriculture, commerce, and industry in North Dakota. That's the first point there in yellow. The second is to be helpful to and assist. This is the entire policy statement of the bank, mind you. I wish we could do things so simply in our legislature now. These 12 sentences, I believe it is to be helpful to and assist in the development of state and national banks and other financial institutions, public corporations. That's the cities, school districts, that sort of thing. That's the way they describe it in North Dakota. Within the state, and not in any manner to destroy or be harmful to existing financial institutions. It's not about competition with the private sector. It's about partnering with them. The third is, a brilliant idea. Let's mobilize the assets of the whole state and our entire financial worth into one large central bank cooperating with the institutions that are rooted in our communities, so that the public financial activities of the state and its individuals will be better off. So let's fast forward a bit back to the farm situation. This week, Farm Aid, National Family Farm Coalition, Food and Water Watch, and some other groups published a report looking at credit for farmers, and they've been hit extremely hard. You think the pullback on small business lending was harsh? Family farmers have been hit even harder. The stats are something like 75, 80, 90% struggling just to get the basic financing they were getting last year. The business hasn't changed. In some cases, prices might have changed, but in a lot of cases, it's the same viable business that has its market, but now cannot get the loan. You can't get the loan to plant your seed. You think about the cycle of a farm. You need a whole bunch of upfront cash. then you wait, and then you sell, and you get a big paycheck towards the end. It's a lot like our retail cycles, right? You've got, sometimes retail companies don't make money. They aren't in the black until Thanksgiving or into the holiday season. And so you've got these needs for lines of credit, and if you pull those from a viable business, they're going to crash, which is a good description of what's happened in our local communities. So what does the Bank of North Dakota do? This is I could probably get too wonky, so I'll keep it hopefully simple. The loan participation, as I explained, hopefully that's just the essential. We as the Bank of North Dakota wait for community bank to present a deal. Bank of North Dakota doesn't have retail branches. It's not funding, paying for ATMs and retail staff and sales force. It's basically waiting for a loan to be initiated by a community bank. Community bank says, we think this is a great deal. We're willing to put all of our chips on the table. We want maximum skin in the game. Will you partner with us? That's the main reason the Bank of North Dakota is so efficient and so productive. 26% return on equity, which is kind of unheard of in the community banking world, because they don't have the retail presence. They're entirely driven by their partners coming to them. Buying and selling loans, just really quickly, think about our housing system. We have FHA and VA loans, the Federal Housing Administration, and Veterans Affairs loans. Those are government guaranteed loans, along with SBA business loans. They're all government guaranteed. Right now, almost all of those get sold out of our state. They get sold to Wall Street entities. So you make this loan. Every month you're paying on your mortgage. What percentage of your net income is your mortgage payment? It's all leaving the state, all of that interest. And that's almost a no-risk loan. So in North Dakota, they said, well, that's pretty silly. Why don't we just retain those? Why don't we create a servicing department so that we can make slow and steady rate of return on a basically zero-risk situation? And then there's some other kind of technical bankers bank stuff that the Bank of North Dakota does. On the other side, and it's extremely important to separate the two. You've got the market-driven average risk or below-risk loans. That's on the left side. On the other side is the economic development. Let's do a loan guarantee for first-time family farmers so they can get on the land and start being productive. Let's do an interest rate buy-down for a viable small business that just needs to get over the hump. So the first few years or whatever, let's subsidize that so they can make their cash flow and either stabilize their employment base or hire new people. And then there are some high-risk sectors that are economic development priorities of the state, whatever that may be. The other interesting thing is when you have a state institution that has banking functions, it can respond very quickly to times of crisis. This is the Grand Forks flood of 1997 in North Dakota. Immediately, things stop, right? The store is flooded. They can't sell, so they're not receiving their income. They can't pay their workers. They can't possibly pay their business loan or their mortgage. You see this real quick transference of that pain through the local economy. FEMA and other national organizations are pretty slow to respond. So in this case, the Bank of North Dakota immediately provided all the money that the local community needed to be able to fund its disaster relief until the FEMA money came in. It was kind of a short-term loan. Let's just get the money out the door and let's get people dried out and their businesses back to running as fast as possible. So when you create your own institution that's got the economic vitality of the state as its focus, you can start to do things like this. Let's put the public funds to use. We have the capacity now. So it's kind of an interesting thing to think about, moving away from the technical a bit. Obvious question. Why is there only one? 93 years. Seems like a good model. Hopefully you're all kind of nodding saying, wow, I like it. The first point is that there are a lot of a lot of states looking at creating a state bank. Oregon, Washington, Hawaii, Maine, Maryland, Vermont, they all had legislation in the session. Other states, Michigan, New Mexico, California, Connecticut, a bunch I'm probably not aware of, are talking about it with legislators. I've been on the call with legislative people across the nation. So this is definitely something that people are going, wake up time. We are not resilient as a community. Our local communities are so at the mercy of these large institutions that would easily make a profit outside of our communities if they could. The second thing is that there are a lot of parallels to the Bank of North Dakota. The economic development side I was talking about, we've got Business Oregon, a very large institution in Oregon that does economic development lending. In California, they've got the Industrial Development Bank that funds a lot of the industrial development of the state. In Idaho, they do that secondary market function, that they buy those FHA and VA loans because they say, well, this is low-risk loans. Why are we letting them leak out of our economy. Why don't we put our, instead of getting a small rate of return by depositing our money in a bank, let's leverage that into these types of loans. So you've got different models where we've got these piecemeal approaches in different states. We also think about the last 93 years, the rise of the Federal Reserve System, where now you've got a system that does some of the correspondent services that the Bank of North Dakota does. So we might not necessarily need that in Oregon because we've got the Federal Reserve System now. You've got private bankers banks that do some of that, or the federal home loan banks. I'm trying to speed through this. Up in Seattle, that's our closest one that provides some of the tools. So it doesn't necessarily make sense to start or to import wholesale the Bank of North Dakota into any which state, but we took the approach of drafting some legislation. Oh, I'm getting ahead of myself. I told you that we have some legislation, so I can go there now, right? We took the approach of starting the discussion, saying let's import the whole. Let's talk about the whole model, and then let's see what makes sense for us. Since we kind of whittled down, we worked with the treasurer, worked with legislators, we worked with community banks. What's the highest and best return for what we could put Oregon money to use? We've got Business Oregon, so let's bring that closer to these lending functions. We've got this economic development funds that are being managed by Credit Suisse and not being leveraged into our communities. Credit Suisse, multinational company, they don't know Oregon communities. They don't know how to invest in our communities. Let's pull some of those funds away and start investing them through the institutions that are on the ground, the community banks and credit unions. So we've drafted some legislation to do just that. And when I say we, Oregonians for a State Bank is a coalition of community bankers, small business, family farmers, faith organizations, academics, general public, advocacy groups, pretty broad. This is all started by the Working Families Party, and hopefully we're all voters in here and thinking about the electoral process and the fact that this two-party system hasn't really worked. But the Working Families Party has come along and introduced some values-based ideas that help working people. It's kind of novel. The 95% of us, right, that make up our states, and they were able to get this in front of legislators through the last election cycle, which our treasurer was endorsed by the Working Families Party, and that's what brought him in to slow down and listen. Goes, okay, there might be some merit here, and through that he really sunk his teeth in and got going. So with it not being a Republican issue or a Democratic issue, we were able to present this as something that both parties could sign on to. So we have a good deal of bipartisan support in the legislature. As I kind of work towards winding down and getting to more interesting things like your questions, I wanted to read from the treasurer's testimony he gave a couple weeks ago, that this legislation would provide a roadmap to what, this is from his point of view, to what I see as a fruitful partnership between the state of Oregon, our existing system of local community banks and credit unions, and Oregonians who are looking for and ready to leverage economic opportunity. It's a first step and a good one. Simply put, the bill provides what we have gone without. It's a united framework into which we can build our economic development strategy. So the governor has appointed Treasurer Wheeler to head his economic development strategy, and he says, wow, we could create this institution, take a first step towards creating something that will insulate us from systemic shocks, provide some tools to leverage funds that are not being used for Oregonians, and stimulate through the existing private institutions. About as limited role of government as you can get to have a leveraging effect in our communities. He goes on to mention a couple other necessary tweaks that need to happen in the financial system, but that those alone, though they have the potential to place billions of dollars into Oregon's local credit markets, without the kind of unified framework provided by this legislation, we might as well be sowing our economic fields blindfolded. And check out our website. This is actually lots of metaphor and colorful language. It's kind of fun to read through this. He ends with, rather than the metaphorical patchwork of subsistence sharecropping into which we've been planting our economic future up until now, this legislation provides a wide field for us to put down roots and build something that's truly in Oregon's long-term best interest. We will cultivate lasting jobs for this generation and the next. You're thinking about what a resilient financial system would look like. In my mind, it's our peers, our banking peers and our small business peers coming together and saying, let's put our capital use in our communities. It's the community banks. That's the model. Serving the needs of that community. And we need a backup, a systemic backup in that, because our community banks today are so tied into decisions that are made thousands of miles away. So a state bank then shores up that and gives them the resources they need to do what they're best at, all the while keeping more of that interest payment circulating in state. In North Dakota, the U.S. Chamber of Commerce, which is not known to be the most liberal of organizations, has said that the Bank of North Dakota is one of the main reasons why North Dakota has one of the best business climates in the U.S., because they fund economic development, and through the revenue that the state bank makes, they lower taxes. It's a great win-win. Think of the bonuses that are going to Wall Street executives. What justifies $10 billion of income? $10 billion can go really far in Oregon, though, in terms of what we could do, rather than sending it out of our state, what we could do here. North Dakota, it's 1/6 the size of Oregon, and yet they've got 3 times as many community banks, the highest per capita community bank state. That would be great for our communities, that we have 2 or 3 community banks in every little community that are relationally driven, and that the competition model can actually work more like capitalism ideally is supposed to work. Not like the type of capitalism we have now that's very monopolistic and needs to be socialized, or the socialization of bailing them out. And I think that's it. It's in our minds, it's a great first step of moving towards insulating ourselves from the systemic shocks that we've seen the last few years. And I think I'll end it there and maybe take some questions.
Thanks, Jared, for some interesting insights on local solutions to a complex set of problems. We have time for some discussion, so please follow Wayne's lead and step up to the mic, and let's generate some discussion.
So what's in the way?
Inertia is the short answer right now. The Oregon Bankers Association was the main roadblock to this. You think about the Wall Street banks, they've got the most to lose. So they tend to speak through one voice. And up until the hearings, they were really working to undermine this. But at last, the community bankers have kind of broken that, and the OBA has realized that they can't speak with one voice. So that was the main hurdle. But through that, a lot of disinformation was spread, and we've been going back through. I was in Salem all day meeting with legislators, going back through and saying, this is the proposal. It's not this other big scary thing that you keep hearing about from the big bank lobbyists. So that's the main kind of, this has to be done at a legislative level. The treasurer can't force it. The governor, maybe he could, but he's kind of shipped off the economic development right now while he focuses on kind of the budget stuff. Is that, I can, yeah, I was going to say I need to cut myself off, yeah. So, yeah.
Hi, Jared. Thanks. Very good talk. Two questions. Mm-hmm. Who owns the North Dakota Bank? Is it publicly owned, and mm-hmm. would that be the same for the Oregon State Bank? And the second question, this idea of local currency in addition to the national currency, is that something that the Oregon State Bank should sort of incorporate into their plan to keep the money supply, as part of our public good, and keep the seigniorage in Oregon, and keep the economic activity more local?
Yeah, excellent. So the Bank of North Dakota is, in its structure, is the state of North Dakota doing business as the Bank of North Dakota. So it's the state owns this enterprise, and as such, one of my favorite, I got chuckles out of the OBA when they first came out against this. They said, this would be an untaxed institution. It's like, well, it's the state, and in Bank of North Dakota, they return 50% of their profit. Which bank in Oregon provides 50%, basically tax rate? Bank of America paid no taxes last year, federally or state. So, let's think critically through the arguments here. If the state's generating this return and it's lowering taxes and promoting economic development, that's a good thing. That's better than being taxed. So that's the ownership structure. We, the people, would own that. It would be our public funds being leveraged for our economic vitality. The second side, the alternative currency side, I'm a fan of the alternative currencies because they really ratchet up the relational connectivity between our consumptive patterns, our buying power. We tend to then know, we're engaged, we've got this trust in this thing that collectively we've created in the form of an alternative currency. Where I've stepped back and not thought as much as maybe others have in this room is that we've got our mortgages and our auto loans and our student debt and our business loans all denominated in this debt-based U.S. currency, which is such a lion's share of our overall personal and business budgets that seems like the place where we can gain quite a bit of leverage. Now, I can imagine alternative currencies folding into this nicely, but that would really be up to communities like this one to say, let's think through this and let's make it work. Definitely complementary.
Hi. When I mention a state bank to my peers, often the first response is, well, I like my bank or my credit union. Yeah. So I wonder what efforts are being made to educate people around this issue that a state bank would be collaborative rather than competitive.
I think you hit it on the nail. We've been really slow going in terms of mobilizing a public education campaign. All the decision making happens at the legislative level, so it's something that's just now starting to gain some momentum, and that's critical, both on the public side, but also our legislators and some of the community bankers think this is about socializing banking and taking over and trying to push out private enterprise. In reality, it's non-retail banking. You and I will not be able to bank with this. We will not be able to interface with it. So that's where the efficiency comes from, and that's also where some of the security comes from. It's not out there chasing dollars. So we need your help. I mean, forums like this help. You all can help. Go to Oregonians4statebank.org. Check out our social media. Plug into that. Spread that word. It would be really helpful to get more of that reach out there. Letters to the editor, that sort of thing. Get the kind of the consciousness up, and that's going to be a collective effort. We're about as streamlined of an organization as you can imagine in terms of a bunch of groups just saying this is a priority. So.
My question's along those, actually just a continuation of what you were just saying, as far as how are there key legislators that we should be, trying to engage about this? Are there key events that, there should be people who, believe that this is a good idea, sitting at? Are there other ways that we could, other than just contacting our specific legislator, are there key ones who we could kind of focus our efforts on?
I'm not an organizer, so I'm going to defer again to sign up on our webpage, and we'll give you alerts on when it would be maximally beneficial to jump in. But I'll do, for those who are part of the legislative process, there are two bills, one in the Senate and one in the House. They're kind of running parallel. They're identical. And in the Senate, it's in the government affairs, General Government, Small Business and Consumer Protection Committee, going up for a vote on Monday. And we believe we have enough votes to pass it out. It'll then go to Finance and Revenue, a logical place to explore banking. So anybody, if you're thinking, I want to go do some work, look at the General Government Committee, the Finance and Revenue, and then just general legislators. They all need to be encouraged. Remember that we're the ones that vote them. On the House side, it's in rules right now. We're expecting it to come to vote. We've had hearings in both. It'll go to Revenue as well. So same sort of trajectory. And certainly tell our treasurer that you appreciate him thinking innovatively. He can use our support and encouragement. And website, again, action alerts. It will help you go there. Yeah.
Speaking of our treasurer, so he had an op-ed in the Oregonian a few weeks back, and it seemed like he was kind of hedging and talking. And you had a slide up there about virtual bank versus state bank, and I was kind of disappointed in the op-ed because he seemed to be kind of like, well, can we do a virtual bank which isn't quite all that a state bank could be? So I'm kind of pushing you to kind of just come out with that. What's the difference? And then what about all the money that our state does invest in Wall Street, PERS, and we have billions and billions of dollars invested in Wall Street as a state in our retirement system. Are we ready to talk about that at the state bank level, or is that something that's too sensitive to address right now?
Great questions. Thanks, Peter. I did skip over that slide, so thanks for keeping my feet to the fire. My apologies. The Oregon State Bank versus virtual state bank, if I were to go back to that. There you go. So remember the Democratic primaries last year? Bill Bradbury came out really, really heavy on the state bank. He alienated quite a few people. It was a very partisan and even caused some division within his party in terms of some of the rhetoric that went on. So there was definitely a running away from anything that had state or bank in it and put them together, and people were freaking out all over. So when Treasurer Wheeler came out with the virtual state bank, he was emphasizing it wouldn't be a brick-and-mortar retail institution. We're going to socialize banking and take over, and we can do it better because government's more efficient than, you get the point. So that's really where that language came from. The the other side is that there's this real fear of losing public funds. And we've got very strong collateral requirements right now. When public funds are deposited, they have to be safe. So if they're not insured funds, the bank is required to collateralize them, which means that if we dumped all of our funds that are invested in banks, whatever's not insured they have to buy. They're required to buy federal treasuries, basically, for that low rate of return. So community banks can't even take the funds and put them to use. So there's so much fear around the short-term fund losing that was just off the table, politically speaking. And if I don't even want to mention PERS, I'll say it quietly here, because that's so politically charged, and there's so many people that are not willing to open up that can of worms. And that, I believe, is majority managed through Credit Suisse. We defer to these outside experts, and it's just a bottom line. What's the best rate of return you can get, rather than thinking, what good does it matter if our retirement went up if everybody's unemployed? It's more of a systemic. We need a more holistic way of thinking about things. So, politically speaking, PERS is off the table. But if you look at Bank of North Dakota, 26% return on equity, pretty good. So they've got almost a double rate of return on their assets of community banking or banking in general across the spectrum. So, and that comes back to the security and the non-retail presence. So it makes sense. I hope that we can get there. We're not ready politically for it. And was there another question there? The virtual, yeah. So we're starting with the loan participations, consolidate economic development, and make it efficient. So efficiency and a little bit more strategic funds. There's no leverage. There's nothing too scary going on. But once we have a track record, it'll be up to us to say, let's do more. Let's kind of dip our toes in and do some more. Yeah.
Hi. I'm wondering how this kind of movement will affect those who work for the big banks, and how the state banks will bring in money to support those who work in that field.
Are you suggesting that we pull enough money that the big banks have to lay people off?
Well, yeah. If this is a serious movement that spreads throughout all the states, and it kind of it becomes more a conventional system in the big banks.
Yeah.
How would that affect those people who work in that field?
Yeah, that's a great question. I really quickly went over the reality that community banks are more efficient business models, despite this story that we tell ourselves about bigger is better and economy of scale. The data is it's out there that community banks are more efficient. So what you have, and a couple of our key advisors come from community banks that were gobbled up, and they kind of went through the ranks and worked for very large institutions, Chase, Bank One before Chase bought them, those sorts of things, and managing thousands of employees, and the inefficiencies alone, and the right hand doesn't know what the left hand's doing is absolutely crazy. So I say all that to say, if we grow our community banks, we'd have a whole bunch more. They'd be more efficient. We'd be able to hire all those people at a higher income and more efficient, and be able to provide more services. So the data is pretty clear that what we get is better wages, more the top level management in our communities. So we'd have more income in our communities, and I think it would be easy to absorb all the people. I'm shooting off the cuff a little bit, but based on the efficiencies and the fact that we would need more branches in our communities of community banks, I think is a pretty compelling argument.
Hi, my question is, if everything goes well for the Oregon State Bank, how long would it take for it to be up and running and on its way, I guess?
Yeah. So the legislative session ends June 30th. We're getting some subtle or not so subtle hints that there's going to be some holdout and kind of keep this to the last minute. So we've got to do all our work possible to keep when I said inertia is our biggest enemy right now, we've got to keep the momentum going so that we can get it through the committees and towards a floor vote. Presuming it would be voted on and passed in June sometime, it's got an emergency clause that would immediately trigger in the creation of the board, and we'd start working on filling the advisory council seats, the community bankers and credit union folks and small business folks that will actually shape this. We'd expect by the end of the year to have that structure in place and lending to start optimistically January of next year. Clause in the legislation says a year from then, January of 2013, that council comes back and reports to the legislative body saying what's next. Do we want a full state bank? Do we want to just appropriate more funds to this? Do we want to make some changes? What do we want to do? So we get get a year track record to get a little bit of momentum going, and then kind of see what the potential is, and then make a decision on that. So ideally, that affordable housing scenario I kept alluding to, the Dalles, it would be nice if it was up and running right now and we could do that deal tomorrow and get, I think it's $7 million into that tiny community and 94 units of affordable housing up and running. The workers are ready. We just need a pretty minuscule bank loan. So that sort of thing. So, anyone wants the question? Yeah. Yeah.
I'm just wondering how contentious this is. I think of like the Ban the Bag campaign, where there's national organizations putting millions of dollars to make sure it doesn't pass. So I'm wondering what kind of is Wall Street trying to make sure this doesn't pass? Do you see that kind of conflict?
Yeah. Here we're being recorded, but I think it's fairly safe to say that the Oregon Bankers Association, if you understand their fee model, the more assets you have as a bank, the more dues you pay to the system. So you've got paid lobbyists that are paid, and all of their money basically comes from 5 banks. That holds 60% of our deposits. The community banks don't have much buying power in that. Now, as soon as I say that, the president would come up and say, well, no, our board is composed of community bankers, blah, 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 blah. But what we've seen is a disinformation campaign where information is not getting to our community bankers. And I'm not going to go into too many more on the record details along that way, but that's the type of undermining thing that we've seen in terms of an association kind of spouting out these talking points that have no reality in our legislation. They say it's going to be a retail bank. No, it's not. It's going to take private or public funds away from. No, it's not. It's going to do risky loans. No, it's not. All these things that just aren't true that they've been saying, but they can't say it as Bank of America, because that would stoke the populist fires pretty good. So that's been the type of thing we've had to undo. And I've had Republican legislators tell me in their office, it all comes down to whether the legislator listens to the big bank that gives them money or the community bank, which they probably know the board of directors on. And right now it's not tilted in favor of our communities. So we're trying to undermine the undermining. Does that make sense? But we would love it if Bank of America came out against it. That would be nice. So
we have time for another question if there's a burning one remaining. Okay, well, thanks for your comments and questions and your presence here this evening. Thanks to Jared for an excellent talk. I'll just mention we will be back here in this location in 2 weeks from tonight for the PSU screening of a documentary film called Beyond the Spill about the PDX to the Gulf Coast project that started during the Gulf oil spill last year. So I hope that you'll join us at 5 o'clock on April 27th for that. If the students who are in the seminar course could just gather here briefly at the end, that would be helpful. Let's give a final round of applause to thank Jared for being here with us. Thanks.